Hello, good afternoon, everyone. Welcome to our weekly REITs highlights. And today, before I start the webinar, I would just introduce you to our Top Fan and Win Rewards, event. So we are running this Top Fan campaign on Facebook from the 15th of July to 31st of August, and we have this as a reward to new or existing clients. So the followers who own the top fan badge will be able to win up to RM100 in their trust account or a 300 ringgit worth of petrol vouchers on lucky draw price when they join a selected webinar. Then this is, terms and condition apply. So read up the fine print. And the upcoming webinar will be on the 27th of July, 8 p.m. It is the reverse candlestick pattern webinar. And if you have not become a client with us yet, just simply sign up via https registration.mplusonline.com, then key in top fan top space fan in the referral code, and we will have the link in the comment section. Okay, so this is just one of the events that will reward existing and also the current existing and also new clients for M Plus Online. So stay tuned for this and make sure you have the top fan badge in the near term, and so hopefully and all the best to you. Okay, so let's move on to the weekly highlights for the session. I will just share my screen. Yep, I just want to share with you what is happening in the market right now. Okay, so you all can see my screen, right? If you can see, just press, just type in the comment section, yes, YES, yes. Okay, so today I think a lot of people would talk about monkeypox, being declared by WHO as a global health emergency event, and yes, the glove companies went up, in the first half an hour, and later stage everything came off. So I just want to mention this on these glove companies because yes, monkeypox being declared as a global health emergency is similar to when COVID-19 was being declared in January 2020. So during the time, COVID was also global health emergency, being being announced as being declared. Then 2 months later, in March, it declared as a pandemic. So people are anticipating that to happen to monkeypox, but the differences are basically monkeypox has vaccine, COVID doesn't have the vaccine, and COVID went through I think nearly a year to get the vaccine out by December. Okay, so monkeypox already has the vaccine. So which means that it should be able to contain um, as easier as compared to COVID. So that is first thing. Second thing is that even with monkeypox being declared as pandemic, it doesn't mean that glove counters will have a spike again towards uh, towards like what we have happened in 2020. Why is it so? It's because if you take note on why COVID pandemic has caused the spike in ASP is because they are not prepared. They're not prepared, so they have to buy spot prices on gloves, and therefore people are rushing to buy gloves, and gloves is running out of stocks like crazy during that time. So right now, since that monkeypox has been declared as global health emergency, maybe hospital are already putting their measure in to say that yes, I want to buy up to certain amount of gloves by when. Okay, so they are more prepared in that sense. Secondly, after COVID-19 pandemic, health conscious or health hygiene mindset is already up level, so which means that people know what to do during pandemic. If they they wouldn't be panicking to buy stock up a lot of things, but they would actually prepare right now. So maybe you all will be able to prepare more, masks, gloves, and things like that. So throughout this period of time, people have the time to, uh, get ready for if the monkeypox turn into pandemic, which I think it shouldn't, because we have the vaccine, and therefore, glove counters should not be, you know, trending as strong as during 2020, year 2020. Okay, so that is my view on that. And the third thing is on, actually, the earnings will come back. Okay, but it will be on a gradual pace. It's not like exponential growth kind of pace for for all these glove companies. So therefore, I would say that downside risk is sort of limited for glove companies. So which means that you buy right now, for long term wise, they should grow. Okay, but you don't expect the growth of the share price will be same or similar to year 2020. So that is what I want to mention. So that is why after the spike, in the morning, I think after half an hour, it already fizzled off. And right now, healthcare stocks, healthcare counters are turning lower. So that is just it's within expectation. Okay. So coming back to look at what is the stocks that went up higher today, it was the financial services, plantation, REITs. Yeah, all these are actually making a good progress. The rest, like energy, is making negative progress. I think this is due to softening of crude oil prices. Technology is due to FOMC meeting, upcoming FOMC meeting that we don't know the tone, and also the FOMC meeting may increase much higher, stronger. Like for instance, if they want to increase 100 basis point, then it will affect the technology. So technology stocks are affected right now, I think, ahead of the FOMC meeting, and also due to the fact that Nasdaq has pulled back on Friday. Okay, so that is just the two of the reasons. Then we can see that telco and media is also coming off. Let's see, Maxis, Axiata, Digi, all these are pulling back. I think in near term we're supposed to wait for the 5G implementation news that was supposed to be out, I think, in May. Then they delayed 1 month to uh, June, but still we're not seeing that announcement yet. So that is the idea behind it. So once we can see the 5G implementing, going ahead with that, then Maxis, Axiata, Digi will continue to steady up. But the main beneficiary of this event is actually TM. Okay, so just bear in mind, TM will be the beneficiary out of this 5G implementation. So overall, I would say that they're waiting for the catalyst to come, but it is not coming yet. So just hold your breath until it comes. Okay. So overall, I would say that there are still some good opportunities out there in the stock market, especially when we have put in our thoughts and put in our idea in before the market starts. We already decided what to put in. Okay, what to put in. Around 7:38 a.m. we will discuss amongst our team, and we come up with a list. So today, let me share with you the the next screen, because we have actually put in stocks, and today itself is a good day uh, for our stocks, despite market is only having a very minimal of up counters. Like for instance, today at this trading break, we have 500 declining counters, we have 236 counters up. Okay, but given that we have put in our thoughts into what is expectation of the stock market, and what will be the very most likelihood for the stocks to trend higher, we have put in all that thoughts in, and we have used our algorithm to pick the stocks, and we managed to pull out some good counters, especially this during this period of time. We out of 1 to 8 counters, we have 5 counters being triggered, and most of the counters are positive, except for Gamuda is just flat, up 1 cent. Okay, so since 9 a.m. in the morning, um, Gamuda has a breakout above, I think, yesterday's high at 369. It went up to 373, and it triggered at 370. Okay, so it went up 3 cents. Right now it's still flat, but for Genting, it is a very very positive tone. We did put in Genting in, and it triggered at 467, and it went up to 470, the highest point, and right now it's 470. So it is still trending higher. It's still positive. So I would say that that is a good sign, and intraday high some more. So overall, it's good. KSL, we have seen the very strong trend, and we put in. This has garnered us 2.5%. So out of these eight stocks, most of the stocks are in positive, like GOB also up 4.9%, and it has triggered, I think, above 31 cents. So 10:45 a.m. it has triggered us, so it has went up. So these are some of the trading ideas. And E-frame up near to 1%, triggered at the 55 cents level, I suppose. And right now, yeah, closing is 54.5, 55, just triggered, and it is still ongoing with the potential upward move. And KSL is triggered twice since the start, 81.5, 82 cents level. Right now it's 83.5. So I just want to mention again, out of eight stocks, most of the stocks that triggered is on the positive side, and our opportunity today is actually 2 out of 7. Probability is 2 out of 9, because 200 counters out of 900 counters went up, right? Okay, so let me just check back. Yeah, 233 counters up out of around 1,000 counters that is in the stock market. Okay, and based on these 200 counters, our counters are up, 5 counters are up. Okay, so basically we are getting very good hit rate, at least for today. Despite market down, we are able to select good counters. So that is just some of the good good kind of analysis that we have put in our thoughts. So let's just give you an understanding of why did we choose all these counters. So Affin and Maybank definitely is being chosen, but it didn't trigger us the signal. Why is it being chosen? Is because inflation is up. Okay, inflation is up. So we are anticipating that inflation is up. Therefore, Bank Negara may put in effort to increase interest rate much faster. So OPR might be up, and therefore that is our intention early on. But when we put in, it didn't trigger us, so we are not in the market for these two. Okay, so Affin is the same thing. We put in, but it didn't trigger us. So that is the thoughts behind it. Why banking stock is being selected is because we believe that OPR will be going up in tandem with the inflation, because Bank Negara may want to tame down the inflation, and when OPR is up, people will trade on the banking stock. So that's why Affin and Maybank is being chosen. Secondly, let's move on to next sector, like construction. Gamuda is up because Gamuda, we believe that the pre-election rally may start anytime from now until November, until next year August. So August will be the final day or final month for them to put out an election, because the parliament will dissolve the latest. The latest is by June, because up to 2023 it will be 5 year period already, and they need to push out an election. So by then they will need to push out an election. So from now until that time, we will be positioning ourselves for some good strong counters under the construction sector, such as Gamuda. And also Gamuda will be benefiting from the sale of the highway they have already sold. Then they have cash, they can do MRT. So we are also waiting for the MRT to happen. For instance, if MRT contract is being awarded anytime right now, I think Gamuda will benefit out of it. So Gamuda and IGM also, is selling off the highways. So that could also be an event whereby Gamuda, IGM, these are some of the parties that is keeping up bullets, keeping their bullets for the next project to happen. Okay, so pre-election rally plus the MRT contracts, and those are the things that we are eyeing, and therefore we have put in all these strong counters, and also the team that is supposed to make sense out of at least this week itself, or until whenever the trend change. But for now, as long as the trend is still strong, we still maintain that the team, the construction sector should be one of the sectors that benefit out of this situation. So Gamuda is in. Okay, why Genting? Why we pick Genting is because it seems like Genting has turned into a very good sideways mode around the 4 ringgit 40, 4 ringgit 50 cents level. It started to go up higher, and this is after the event of their Alzheimer research. Not to say positive or negative, but I think it didn't have a lot of strong breakthrough, and therefore it has sold down earlier on from 5 ringgit to 440, 450 level. Right now, it seems like a good place for the recovery team to come back. So you can see that despite the monkeypox is happening, but the share price of Genting is going up. So which means that people doesn't fear too much on the monkeypox event, but they are looking for the recovery team. So you have to understand market is actually positioning themselves despite the monkeypox is a global health pandemic, global health emergency. Genting is still going up. So which means that people or the market is actually attuning to the recovery play rather than afraid of the monkeypox turning into a pandemic. So that is what I want to emphasize here. And based on the trend or on the daily chart itself, we can see that it is very clear cut that it is sustaining, above the 440, 450 level and forming a flag formation breakout. So this is downside risk limited, upside reward could be seen around the 490 or into its 5 ringgit level. Okay, so overall, just I think we are in the recovery team rather than the fear of the concern of turning the monkeypox into a pandemic event. Okay, so KSL and GOB is under property sector, but you must be thinking why during this OPR hike environment, we are still putting in KSL and GOB. And it makes sense for us to put in GOB and KSL in, and proven to be right today that it has a breakout. So we have been seeing volume has been picking up in property sector, especially on the very strong counter like KSL and GOB. They are actually uptrend in tech position. So they are above the moving average 200, and this is also above the moving average 200. Okay, so both are having a very clear cut trend. Okay, unlike SP Satya and also EcoWorld, you can also trade them, but I would say that um, and not as strong, and therefore we didn't put that in. Okay, although you can say yeah, down very a lot, the upside reward is there. Yes, you may use that as argument, but I would say that uptrend will be more stronger than the downtrend counters. So like this one, EcoWorld, SPCT and also EcoWorld, I think is on the downtrend formation, but it is not as strong. Yeah, you can see that it is not as strong as what we have picked, KSL and GOB. So what is the intention behind, what is the intention that we put in the property counters despite under this OPR hike environment? Is because I think the HOC program has extended. So therefore, the HOC event um, could benefit the property sector. So that's why I think that is one of the reason that we see a good opportunity in KSL and GOB. Okay, so KSL is in the region of Johor and GOB is in region of Penang. So perhaps you also can look into that. These two areas are also intending to come up with the LRT or MRT projects going forward. So in that sense, we may be able to position, for that purposes. So because GOB and KSL can benefit out of this MRT or LRT project, which they don't have it right now. But SSP Satya and also EcoWorld are in a Klang Valley region, whereby this is already quite established MRT and LRT project. So the upside for them is not as much as the Penang side and also JB side. So that is my our team's analysis that bring us to KSL and GOB, which perfectly traded higher for this this morning. Okay, E-frame is tagging along with the idea of if construction sector is moving, the building material segment is also should be moving in tandem. So that's why the breakout happens, from the highest point yesterday around 54.5. Right now is breaking through again above, piercing through the recent high, and so hopefully that it can sustain. But at the same time, if you take note on this counter, if we draw this line here, it is a sort of a breakout, and this is a very good upward trend breakout, pullback, and continuation pattern. So if we are using this scenario, this range of 62 cents to 68.5 cents will be our ultimate target. And if you look into a longer term time frame, this might be the rally, the pullback, and then hopefully that long-term wise, we can see this upside towards this level here, which is near to 76 cents. So long-term wise, we are seeing 76 cents, short, medium, long-term, 62, 68, and 75, 76 cents level, okay, for Econ Trade. So these are some of the ideas and thoughts behind, all this today's peak, and hopefully that they can sustain until the end of the day. And we only put in effort to look out for uptrend counters and under the team, and we put in based on all these factors, and we hope that this can benefit the retailers out there, which is the public, and also if the signal is right there, then it should contribute to potential earnings in your portfolio. So that is the whole idea of daily picks. But if you don't have any ideas, you can always check back what are the previous 7 days of trading ideas that we have put in. Then you can check whether does it make sense to you, has those counter breakout and make some good performance. Okay, so before we go into traders list, I want you also to put in into comment section your question. Later on, I will take 5 minutes to 10 minutes to talk about your questions and to review your stocks. Okay, but you must be able to get the share badge before I review your stocks. So how can you get the share badge is by sending out this click like button and share this video out to your circle of friends, and then you will get a share badge. And once you have a share badge, once your question is in the comment section, and we'll take it from there. And we'll after we review the traders list, we will take some of the questions from the comment section. Okay, make sure you have the share badge, and in order to get your stocks being reviewed. Okay, so so looking at the traders list, we are quite positive that our traders list, once they are triggered, they are in the very uptrend counter position, uptrend tone position, especially in Gas Malaysia. This is also what we have put in during our market outlook. Market outlook, we have put in this Gas Malaysia, and it has triggered us at 1037. 1037. Let's check 1037. What is the price at 1037? Okay, so 1037 is around here. It has triggered us around 318 towards 322. Right now it's 323. Highest point is 324, 325. So it has triggered us at a very good timing, and perhaps you can actually continue to monitor this. I believe that in the upcoming quarterly result, it should be very positive. After the earlier results, it has rallied, it pulled back, it continued to rally higher, from this point. So during our market outlook, we have, put in the ideas around 3 ringgit level. So right now it has went up to 325. It is definitely more than 5% return. Okay, so this is one of the counters. And other counters like ABMB, also we put in, it has triggered us as well. IGM, we have put in much earlier. It has started to break out again. Taliwork, let's see. Taliwork has made some short-term breakout moves, and Taliwork is very solid. They are always paying good dividends, and dividends I think could be seen around 5 to 6%. Okay, Hexstar. So Hexstar has a breakout, but it didn't really make a good progress, but it has formed a hammer pattern. So I think there is still some opportunity here Uptrend is still intact on this counter. SIGN, let's check SIGN breakout here, 127, highest point 130. Yeah, so there are multiple of good opportunities out there. YTL Power as well as this Bao State is also breaking out. Yeah, so breaking out and seems like it is trying to head towards 84 cents level for Bao State. So if you don't find any good counters in the daily picks, this could be one of the places that you can actually look for. Like KYM, Kim, breakout even higher above the 55 cents level. So this is some of the good, his track record that we have. We have put in at least ahead of the counters being a breakout. Okay. Gamuda is, yeah. Then Dayang is also under our market outlook during the 1st of July. And what is the breakout point? It was at around 93, 94 cents level. Okay. And E-metal also breakout. Okay. So E-metal also breakout, then trying to see whether does it, continue higher. So I would say that, trend is very strong on E-metal. It has pulled back and rebound from this point of 58. Right now it's around 67, 65 to 67. So uptrend is still intact. You can use the EMA 5 or EMA 10 to actually trade your profits from this point. Okay, so these are some of the counters under this event traders list. Traders list. So we have daily peak, we have traders list. Okay, so I think we have come to an end for the session. I will go ahead with the Q&A section. Okay, so we have reviewed most of our stocks. I've told you about why we have picked all these counters. And if you don't have any, daily, ideas, you can always look into traders list. Those are the places that you can find good trading ideas. Okay. All right. So first question here we have: what is the expectation of the U.S. FOMC rate hike and GDP this Thursday? Increase or decrease? I think if you're referring to the U.S. FOMC rate hike, I think this current FOMC meeting should be a non-event, and we should look at the next few prospects. Okay, so for instance, FOMC meeting, if they put in 75 basis point or 100 basis point, that is within expectation. But if it is putting in 50 basis point, then market may rally. Okay, may rally because it is on a more dovish tone. Market should cheer in that event. Okay, but my expectation is it should be around 75%, 75 basis point, and therefore it is not nothing much to shout about. And the Wall Street should just consolidate and not having any strong movement up or down. But they would look at the prospect. So for instance, if the prospect is saying that, they are turning more dovish or more hawkish, then that would actually impact the stock market. So the 75 basis point or even 100 basis point will not affect, but the prospects of it will impact the stock market. Okay, so people are also anticipating that the GDP might be turning lower. Okay, turning lower or in a contraction mode for US for the second quarter, and so if they are turning into a recession mode, then the knee-jerk reaction will happen in Wall Street, and perhaps FOMC could also turn slightly dovish in 2023 or even 2024 onwards. And that is also a sign when if they are turning dovish in the next event or next outlook, and that would benefit the stock market as a whole. And secondly, if based on my historical track record of GDP when it is in the contraction tone for 2 consecutive quarters, which means that they declared as a recession, normally that should be the range of ending for the bear market. Because in 2008, it has happened, same thing, when they announced recession, stock market rebound higher. Okay, so in 2020, it's the same thing as well. They announced recession, affected by this COVID pandemic. The market rallied strongly. So based on the out of 10 times of all this recession, only 1 or 2 times it continued to fall further. So what I'm mentioning here is that people might all have already priced in most of the negative news, and people are looking ahead. If people are looking ahead, this might be the opportunity to buy once they declare the recession. Okay, so just that is just my idea. So increase or decrease doesn't impact that much anymore, but the outlook of it, that is more important. So GDP, we need to find what is the outlook. Is it having already bottom in terms of GDP, and moving forward, should it be recovering? So people will be looking at that, or people might be justifying based on if contraction phase on the economic section, activities, then will FOMC meeting turn more dovish, and then that would also bring a good rebound in the stock market. So both events, I would say that the chances of the downside risk is limited, and the upside reward is much better looking as compared to the current position. Okay, so that is how you use benefits and also the risks. See which one outweighs which one. It's like having a jab of COVID vaccination, you have the risk as well. But if benefit outweighs the risk, then you should be having a very sort of a calculated risk entry level at this juncture. Okay, so next question we have Tenaga. So for Tenaga, right, I think it is pretty much oversold, uh, and this range should be a very good range for you to position yourself for a long-term uptrend. Okay, for the long-term uptrend, I would say that downside risk is limited because it has tanked from 9 ringgit to 7 ringgit 90 cents, and right now it's hovering around 8 ringgit zone. So I am looking at this price, the MACD indicator, and also the RSI indicator. This might be the range that we can position, but you don't have to all in, but you can buy in patches. For instance, buy around 8 ringgit zone for first batch. So for instance, if they continue to fall further, then perhaps you want to average down. But again, I think the downside risk is quite limited because of this very significant sell down, which is more than 10 to 13%. Okay, so 13% sell down. So I think for blue chip down 13%, I think is very significant. So moving forward, okay, you must think whether is there any increase in tariff. I don't think that they will increase in tariff, but maybe in the tier basis they might increase in by tier basis, like maybe B40 will get more subsidy, and M40 will get lesser subsidy, and T20 must pay full amount. So if that is the case, then this will also benefit because right now is across the board. The government is giving out subsidy for everyone. Okay, but if they have this tier reward, maybe that will benefit Tenaga because the subsidizing of this event may reduce, may improve the earnings going forward. So therefore, this might be the good range for you to enter. So I think oversold has been seen. Right now is having a good rebound formation going forward. Okay, so that is Tenaga, my outlook for Tenaga. MFLA, okay, given that the FLA is the wheat prices is actually coming off, uh, I think MFLA should be able to perform much better as compared to the previous financial results. Okay, so the idea is that our sentiment tells us that wheat is coming down, earnings should be going up, but the share price of MFLA is still not moving. So which means that there are some structural issues here. So maybe subsidy is still being affected um, by this sentiment, not as great as before, or even the earnings are not turning better yet, or maybe they can't cost pass through their recent quarterly costs. Like for instance, wheat costs they have been incurring over the past month or past quarter, they can't pass through yet. So maybe that would affect their earnings going forward. So it is still weaker earnings as compared to when wheat prices is coming off, they should be making more money. But I think maybe the lagging effect of the cost may not be able to pass through so fast, and therefore that would impact their earnings going forward, and therefore prices are still not moving higher. So even though when wheat prices is going up, they did not, share price did not tank a lot. When wheat prices is going down, they did not go up a lot as well. So I think this structural issue is still there, and we're still waiting for more clarity. But for now, I think it's still not the time to trade very strongly on this counter. But if you want to trade on rebound, yes, you may go in. 57.5 cents is a cut loss. And I think by the SMA 200 level, you have to, take profit, 64.5 cents. Okay. REITs counter, YTL REIT. I think REITs counter is just hovering sideways, although we are saying that recovery team is coming in. I think the recovery team is only the pent-up demand for consumption activities only lasts over the past couple of months. I think going forward, when inflation hits higher and higher position, people will say that it's too expensive to spend, and we are likely to see a slowdown in all this pent-up demand. So perhaps if you want to trade on REITs, I think just use the range of 92 cents to 97.5 cents, and especially REITs is based on the dividend yield. So I think you have to use the dividend yield as a benchmark. If 5% or 6% is good enough for you, then I think you just use that as a benchmark to trade. Okay, but upside potential may not be as strong. CIMB still within our expectation of uptrend movement, and I think we are still likely to see further upside due to the OPR rate hike, OPR rate hike environment, and likely to see further upside. I would say that next target will be around 541 and 557. Support is around 5 ringgit zone. More upside potential rather than downside risk for banking stocks at this juncture. Okay, last counter that we have from the comment section, or those that have a sharer badge, Supermax. I think, like I mentioned earlier, monkeypox is just an event where we will be able to handle it quite, efficiently and effectively, due to we have gone through the COVID-19 pandemic, and with this monkeypox having a vaccine, rather than no vaccine of during the first 10 to 12 months period of COVID-19, I think we are much safer in that sense. So in that scenario, we are less likely to see that 2020 movements to repeat. Okay, it's unlikely, almost unlikely to repeat, unless the people are buying at spot prices again. But again, throughout these past 3 years, supply is also going up, which means that people are actually venturing into gloves, and gloves supply is up. So which means that ASP will be very stable downtrending move. Right now, it may continue to gradually rebound, but it will not have this exponential move of rally to be seen. So what I'm thinking right now is even going up back to 1 ringgit for Supermax is also quite tough. So the max that we can see from this 82.5 could be around 125, which is near towards the SMA 200 level. Okay, if you want to just buy on longer term, yes, you may, because I think the downside risk of the earnings to go even lower in terms of to even contract further, it will be less likely going forward, because people are focusing on monkeypox, and therefore people might be buying back the gloves, and ASP will stabilize and gradually grow for the longer term. Okay, so Supermax wise, if you want to trade, 82.5 cents will be the breakout point, and for the cut loss position will be located around the 80.5 cents. Double bottom formation has been seen, so you can treat that as a good potential breakout, 82.5, and try to trade higher towards 87, or even 1 ringgit zone. I think 1 ringgit zone. And bear in mind, Supermax is also having a market cap lower than net cash position. So yeah, that is also another catalyst that people might want to focus. Okay, but for now, I would say that monkeypox is an event where we will be able to handle quite effectively, as long as the SOP is used well, is done well, and all this tracing is done effectively. I think we are not in a rush to buy Supermax in a big way. Okay, but if you want to trade, yes, you may trade for this event for short term. Yeah. Okay, so that will be it for today's session. Thank you so much for your time, and we'll see you again next week. And bye bye.